making sure you're staying in the direction of the trend. Now, there's a lot of different ways to do that, and I'm going to cover a couple different ones and a few of my favorites. But realistically, when we're talking about staying with the direction of the trend, what we're kind of looking to do is stay in the general flow of all of the pictures. We want the big picture, the little picture, the medium picture, everything all kind of generally pointing the same direction. If I want to go long, I want all of those typically pointing up. And if I want to go short, then I want all of them typically pointing down. Pretty straightforward. But sometimes the market doesn't give us the cleanest of moves. It's not that textbook thing that you would see in some of those cutouts and printouts and all of that. It ends up being a bit dirty. And that usually is the case, actually. So trying to figure out how to discern what the trend is doing, there are a lot of different ways to do that. And one of them I've actually got on the screen right here, and that's using the Ichimoku cloud in combination or in concert with the Heikin Ashi candle style. Now, I like utilizing those two together because the Heikin Ashi style makes it a little bit cleaner. It makes it more trend friendly. And then obviously the Ichimoku cloud makes it very obvious in terms of where you're going, which is the whole point of the cloud. It stands for at a glance. That's its translation. So the fact that we can use this as a trend direction becomes pretty apparent. And what I like doing is utilizing 3 different time frames to give me a good idea as to what to expect next. And the way that we can do that is utilizing fractals. I like fractals of 3. So you've got 5, 15, and 60. I know it should be 45, but 60 just made a bit more sense. So whatever. It doesn't have to be perfect. The big thing that we're looking for here is making sure that we're staying in the direction of the trend. If I want to be a buyer, then I want to ensure that price is staying above the cloud and the cloud is green on the 60-minute chart. When I zoom into the 15-minute, it's green. Price is staying above. That's good. And then we go into the 5-minute chart. Oh, wait a minute. It's red and we're below. I'm starting to think now, hey, wait a minute. These two are telling me the overall direction of the river is up. But the 5-minute, the one hanging out behind the fast one, is actually down. That could signify that this is a potential pullback more than anything else, and buyers will begin buying and accumulating down here or waiting for a pop back up as a reconfirmation. But this is a really good way that quickly allows you to see, and as the name would suggest, at a glance, what the trend is. We're bullish, okay, we're bullish, okay. Oh, the 5 minutes bearish, we might be in a pullback. I'm waiting to see a little bit of a pop. Here would be another really good example on Bitcoin where we have the Heikin Ashi candle style. Again, mainly just because for trend directionality, it makes it very nice. It's green bars is still going up. When it's red, probably pulling back a little bit. Super straightforward. But it's a very simple approach. Here we have an SMA, a simple moving average. In this case, it's a 34-period moving average. It's a little bit slower, kind of in the medium realm. And the importance of having a medium realm in this case, not like a 13 or a 21 if you're like the fib numbers, or just a 20 if you want to stick with the easy ones, or something a little bit slower like a 50 or 100. You want something kind of in the middle, and 30 to 50 would be okay, but you don't want to go too much above that. Something that still kind of moves around with the market a little bit. And really all we're looking for is all of them to be on the same side of things. When the market's bearish, then generally speaking, we should see the 60-minute below the moving average. The 15-minute should be below the moving average, and the 5-minute should be below the moving average. As long as all of those things are a check mark, then you've got a potential for continuation. And if the 5-minute, just like we saw in Ethereum a second ago, is above, then it could be a clue that that might be a retracement for a continuation back down. And a lot of times, some of the best ways to figure out when the trend is working and when it's not, the best way to do it is to keep it super simple like this, because that way it's easy to follow along with. If you're using some big, crazy, convoluted system, it's going to be difficult in the heat of the moment to make sure that you're staying on the right side of things. So there's one thing that you'll notice really quickly about all these. They're really, really simple and really straightforward. even using something as straightforward as the swing indicator on NinjaTrader. In this case, this is the swing indicator with a setting of 50. And the setting of 50 basically means that it has to have 50 candles going up to a peak and 50 candles down from that peak to create a swing. That's a defined swing in this case. So all of these areas have 50 ticks or 50 candles up and down away from them, creating those areas of interest. And as we know with a trend, when you're looking at a trend, you typically have higher highs, higher lows, higher highs, higher lows. As long as the market keeps doing that, then the trend is continuing. Now, keep in mind, there are a few caveats to that. Typically, the first breakdown of this movement results in a continuation as well. So if it breaks down, it usually gives it one more shot, and then they can do whatever they want. But that's the similar thing that we're looking at here. As long as the swing indicator is showing that it's making higher highs and higher lows, then I have every reason to believe that we're in an uptrend. In this example, we have a low, a high, a low, and we've got another low, and now we've got a high. Well, if we connect those dots, even kind of connect those two, we can see it makes a higher high and higher low. At this point in time, the trend will have been up. Now here we can see the market tried breaking down from that, and it did end up rotating higher. But the swing indicator is a really good way just to give you a general idea as to where the major trend may lie, and just keeping an eye on super simple stuff. Again, keeping it really easy to follow along with. Is the market making lower lows, lower highs? Then it's a downtrend. Is the market making higher highs and higher lows? Then it's in an uptrend. Keep it easy. So what do you use to determine the trend direction? What's your favorite way? Do you have a specific indicator that you use, maybe a custom proprietary indicator that you made or that you picked up along the way? I'd love to hear it in the comments below. For me personally, I'm a big fan of just the simple stuff, moving averages, market higher highs, higher lows. Sometimes I'll go exotic and you might see an Ichimoku every once in a while. But that's going to do it. Like we always say, keep the stops in play, stay safe out there, and as always, let the winners run. Until the next time, have a good one. We'll talk to y'all later. Thanks.